Hi, Matt. My name's John Borshoff, and I'm the MD of Deep Yellow, and it's a company that until just recently it's got assets in Namibia. And we've always professed, since my 5-year involvement in this company, that we had a two-pronged growth strategy, one being advancing the value of our existing projects through organic growth, and the other one was the growth strategy to include sector consolidation and getting inorganic growth going. Well, and I'm glad to say we're succeeding, looks like, on both sides.
John, lovely to see you. Thanks for coming back on the show. Anything happening at the moment?
Yes, we announced a merger with Vimy Resources, which is a junior that has two nice assets in Australia. One in Western Australia called Mulga Rocks, which has got about 90 million pounds, of which there's about 70 or 60 million pounds of reserves. And it's at DFS, finished a DFS, although there's still quite a bit of work to be done. And they've got a project in Alligator Rivers, where Ranger is, and it's the big tiger elephant country for uranium mines, or uranium potential, and where I've worked in my previous life for 14 years, and we were sort of pioneers in opening up Arnhem Land with access agreements. So that's been a big announcement, announced on Thursday, 31st of March, and on top of that, we've got our organic growth, which is also going very well.
It is indeed, but let's stay on the Vimy acquisition or merger, I should say. Sorry. Second go, first time round didn't kind of work. Was that a timing issue or a disagreement around strategy? I mean, what?
Look, I think that as you know, Vimy have had a fair bit of disruption and disturbance with personnel and boards, and we maybe came on a bit too strongly and to sort of convince of the advantages, and that in hindsight was a process that took a bit longer to cook, and so that announcement was made in November, but we still persisted, and we came out to a favourable arrangement, and the merger is doing what I believe it's essential in terms of getting a new expanded Deep Yellow, which is what the sector needs in terms of how it has to perform going forward.
So it is a good deal. It's this isn't going to be a conversation about whether or not it's a good deal or not. I would just like to understand some mechanics of it, because it's kind of interesting the way these things get put together. So do you think that you've overpaid this time, or you've had to overpay because of the process you went through before, or was this just a sort of baby steps trying to work out where the line was, where you thought you could get them over that line?
Well, this was unanimously agreed, and I believe the market tells the story. And in a merger like this, generally speaking, the acquirer share price goes down, and the acquired goes up to whatever the pricing is of the scheme of arrangement. Well, in this one, which is a very, very rare case, I'm told, Deep Yellow stock has gone up, and that means that it is well pitched. Maybe the investors can see the bigger picture of what's emerging within a backdrop of a very exciting transitioning uranium nuclear industry, and those things are coming together. So the pricing is really quite remarkable, or the reaction in the market is remarkable, which would say that I think we got it just about right.
Okay, so if we look at your project, the Tumas project, you're working towards the DFS at the end of this year. You're waiting for environmental. Well, you need the environmental permits in place for that. Was there a need to do this acquisition now because you needed something which is a little bit more advanced, or is it? Because I'm looking at this thing going, you've got two development projects in your hands here, and it's like, how do you move that forward? Can you do both? Is one going to take the lead, as it were? In which case, which one? I mean, where do you go from here?
Well, we're on the tumours, and I have no sort of favourites here, but tumours is going on schedule. It will be completed in sort of late this year, mid last quarter. The environmental approvals are on schedule. We hope to get them also mid this year, and so everything is on track there of a completed DFS in the fullest sense of the word, and thereafter it is the sort of design engineering, the feed, the detailed engineering that needs to be done, which will take about 6 months or so. With the Mulga Rock, the Vimy people in themselves have said that they're revising the DFS and incorporating some base metal sort of aspects, exploitation in it. And really the DFS won't be finished until late this year, maybe early next year. And so both projects are tracking about the same, and the aspects we'll be spending money on both sides. So by mid-year, and probably when the sales contracts come into sort of hopefully come to have some bearing, which is only then that you can talk about having an investment decision. That I believe, whether Tumours starts first or Mulga Rock, there's probably about 3-6 months in them between them, and so it'll be whatever provides the best value to the shareholders, and cognizant of the issues that it's a sort of environmental regulatory issues that Mulga Rocks is under, but I think we can manage that very well. In Paladin, I developed two projects almost not concurrently, but Langer Heinrich, and then 2 years later, while we're expanding Langer Heinrich, we developed Kayelekera, and that's not new to us. But I didn't do it because we needed a project that would sort of either replace or do anything with tumours. This is far broader scheme and vision than that sort of aspect of, this one's not as good or that one's better. We'll make money from both of them. And the whole thing was, I've been after, acquisitions for 3 or 4 years, and it's imperative to get this. There's no way you're going to differentiate yourself from the sort of single asset companies which have sort of limited sort of opportunity with utilities, and now with security of supply issues. It's amazing how a good idea always comes up with justifying it. And this diversity of supply, security of supply, add to a story that Deep Yellow has been extolling the virtues of for 4 years.
Let me come on to that, John, because there's a lot of touch points here which are really interesting to me. So let's start with the merger itself. So it's headlined as $658 million merger, right? So you're now of a size which kind of compares to some of the uranium equities in North America. It's getting there. So you're on the map, as it were, or more noticeable on the map, I should say. So does that give you access to a different sort of investor group? Because I'm coming back to this thing. If you can develop these things almost concurrently, if they're within 3 or 6 months of each other in terms of developability, you need to fund that, right? And given the nature of the uranium sector, where you're looking for term contracts to kind of give you the incentive to move forward at whatever price you think that needs to look like. Does that mean the way that these, debt equity deals get structured are different from, say, conventional mining in that sense? How do they get put together?
Well, right. So first of all, we're not rushing to chase our tail to get into production. I know what we can do. I know what we can deliver. Utilities know what we can deliver as well, just based on our past unique sort of history and performance. So the whole issue is that in terms of working out the debt equity sort of structures that will be, I'm fairly convinced that we will take our time and we'll go for, we'll try the bank financing, which is a hard road, and it's only for people that really, I believe, know what they're doing as a full team. And once you've sort of cracked that sort of access to that sort of funding, you not only end up with a company that's cleansed for other shareholders to come in, because it's a hard won debt, but it's also very much, it's got value. It's got it's not as expensive, and so those elements are the single aspects which we then run not in parallel. These will run 2, 3, 4 months. But we've also got utilities looking, and I've not approached any. They're coming sort of, hey, where you're at and all of that. And they're very interested in now seeing a company that has got the potential to deliver over £6 million in 2 jurisdictions. And as we've said before, we're looking from, to go to 10 to 15 million pounds in the decade. And this is something that is highly attractive when you look what's available within the stable of potential developers, and the surety and the safe hands we offer. We don't want to give up any equity on these projects. We believe that that should be reserved as much as possible for shareholder value. But we will take anything in terms of ideas and ways in which to sort of extend our thrust, if you like, if there is really accretive value, even in deals in terms of getting projects into production. So I don't think we will. We're not alone. People are there at the end of telephone numbers and email addresses that say, look, we're kicking off now to start a process. That process will in itself be very geared and slow, and getting those relationships cemented with real data and information that some of these organisations need. And with that, our marketing side is strategised within that, types of contracts we need, how much we need, and we're not going to bleat about them all the time. They will, when they're ready and they come in, it'll all sort of come together. The whole thing of getting a operation such that you can fund it and then get it operational is more than one bloody contract. You need a myriad of them, and they all need to sort of interface. They all need to be meshed such that they don't all fall off at the same time at the end of a period. And there are all sorts of aspects to that which I think we will do, and it'll be a slow process, and they'll be geographically diversified and also nationally diversified contracts. It's a real hard job, and it's complicated. And people that say, oh yeah, what are you doing? Oh, I got my guys looking for a contract, like it's a live thing somewhere in a swamp, and trying to hunt it down. Well, it ain't like that. It really is quite intricate way in terms of collecting these and having enough there, as I say, to start your project. I think we've talked about this before, and on that you'll have quite a bit of production that you haven't committed deliberately sometimes, because you've got to be betting on upside increase in uranium price. You don't want to lock out that chance for shareholders that have stuck by you for such a long time.
It's interesting.
So I don't know.
It's interesting, John. Again, so much to talk about. When I'm talking to or listening to some of the uranium companies out there, and they've been talking to me the last couple of years, saying we need uranium at this price, the price it is today, right? And I bring this up. I remind them, you told me 2 years ago you needed the price it is today as an incentive to get into production. It's here now. So when are you getting into production? And I get the inflation. The market's different. A bunch of reasons why they can't do it. And I think you're starting to address or talk to some of those points. It's a little bit more complicated than perhaps the sales promotion and bluster would have led us to believe. But I don't want to talk about that one because I don't want to get into what he said, she said. What I do want to talk about is the utilities, right? Because the optics for the utilities of this merger, I guess, are apparent. But the other bit of how the utilities read something like this is perhaps there's a recognition that there aren't as many development projects going to get into production as perhaps they thought or were led to believe, and in which case that causes them a few issues in terms of putting contracts out and doing their own version of layering and meshing. So you're saying you're getting inbound, but you're not soliciting it. Is there a recognition from utilities that perhaps the pounds won't necessarily be there now?
Not yet.
Okay.
And the reason I say that is that, like those old coal miners that used to send canaries down in the coal mine and everything was okay until the canary dropped off the perch. That realisation hasn't quite come to the utilities, although they're starting to stir a little bit. And the immense damage done over the past 3 or 4 years of this over-promising, oversimplifying, and each company going out there and saying, oh, I'm going to come in at $45, I'm going to come in at $50. It was really patently obvious that this was not possible. And even the mothball projects, and the only one that realistically looks and understands that is more Cameco. And even, to say, well, it's going to take me 12 months to get a project going to its full capacity, and one that they've invested heavily in its maintenance while it's been mothballed. So it hasn't been as if it's been left alone, sort of a big hulk, and then saying, oh, hell, we better get this thing shipshape. So the whole aspect of now, people being sort of quiet about what they're going to offer, and as you say, the numbers are beyond where they were saying they would make their investment decision. Goodness me, you just don't make an investment decision on the froth and bubble of spot price. Although it's a very nice thing, and I've noticed now that term price has been static around the $45. It's bumped up to 55 or 50, I think it is, and but it's got to go. Come and talk to me when term price is $65, and people are clambering to lock in, and the type of contracts then you need at that. That's where it's got to be for a sustainable industry. So the industry has been brought to its knees in this sort of post-Fukushima, where utilities have gone for the cheapest, really riding down the producers, and now they're left with a quite a desolate field where there's not going to be that many that I believe will come to the fore. But the complacency is there with the utilities. It's still the Sputs and those of that world that are trying to sort of hold it up and, try and take some minor amount of inventory out of the system. But as other catalysts come into play, as traditional supply sources come into play, as the sort of the enrichment capacity reduction that will come into play, as then the remaining diminished capacity then has to use more uranium to put out product quickly and maybe increase by 20% production, are all now coming through where the utilities may now start looking and saying, oh, let's look at this real world that's out there and where. And I think that's still 3-9 months, who knows, away of that happening. Really, you've got to trust that this will, that you cannot get uranium just being supplied from these unknown sources of a legitimate business that already before our eyes has got 20-odd new reactors have been declared in the last 3 months, which is phenomenal. And that needs more uranium in that sort of 2040 period and plus. So the utilities have to come to grips, and as I say, when that is, we just need to build our project, our schedules, our teams, and that we are a competent, sleeves up, safe pair of hands group. So I want an association with that group because I can be assured of getting some of my product.
Okay, so knowing that, and so it comes back to a version of an earlier question I asked, which is around how you fund this. So you said this, you don't want to dilute shareholders. So doing both at the same time is possible, but you don't want to dilute shareholders. You feel that there's a kind of structured finance which doesn't necessarily include a whole chunk of equity, because obviously at today's price, $658 million merger, the capex would be, well, a fairly sizable amount. Going and raising, even if it was only 40% of equity, would not be, I guess, palatable to you or shareholders. So you feel that if utilities step up, recognize where they're at, you can get these term contracts at a price which works for you guys. That's the moment you will decide how you finance the kind of capex component and the order of play.
And how yes.
Right. Okay.
Yes.
Understood.
There will be equity. I mean, I went Paladin more on the debt side and kept the equity, and I think that was wrong. I think the shared responsibility of growth between the shareholder equity and hopefully done at share prices that are less dilutive to the shareholder on accretive projects, and then balancing that out with debt structures beside it on good contracts that can service that, while there's plenty of inventory there to capitalise on the upside, is the sort of plan which we are going to articulate internally now as we're getting closer. And we'll have a plan without it before we even go out, of course, into any market, be it for finance or contracts and all of that. Just let them know what we're at. Let them know what is this new, exciting, emerging uranium player of scale that's coming into the business, and what it offers and what it can do. Let that sink in. And I've found that markets take a lot of explaining to get that through into their heads, apart from retail guys who can get it pretty quickly. But the bigger groups, I think institutions will start getting it. And you mentioned how will this scale make a different? We'll get into a different index. We'll get into a size where people say, and institutions come in, geez, I can set up in this group. This is worth my time. Where we're going, and having said, look, we have stuck and consistent to our strategy. We've done phenomenally well on the organic, and we will do that, and we'll continue to do that, and also on the Vimy assets as well. So that part, but getting into other opportunities. And what that allows the company, and what it gives the chance for the shareholders is mind-boggling.
It is. Yeah.
And our credibility to do this, the big thing is not only that we got this, but they can say, God, this team has actually said what it will do. And it's taken a bit longer on one side, but it's bloody well done it. And nobody else has done it for 12 years in terms of a good sector consolidation.
So again, following up from conversations we've had in the past and with other people in the uranium space that his opinions I value, it's quite clear there is a need for consolidation in this space, and you've got a couple of companies in the US trying to do that. Is this the first of many, or is this the first of more M&A from you? Because you feel that this baby step is quite interesting, as you say, because it gives you a size and a scale to get noticed by deeper pockets. Potentially, it also says you could do an additional listing elsewhere in the world to access other money too. And you've got 2 development projects at DFS stage by end of this year, so that gives you credibility. But it's not necessarily credibility to go and raise money for just the capex component. I'm wondering, what does it do for you in terms of accessing capital for M&A? Should you choose to go down that track, more M&A?
Yeah, look, I won't go down into where my vision is going, but people have got to say, I think this bloke knows what he's doing, and he's that plan and beyond what you can see to the horizon. And some of those reasons why that is, and people saying, well, it's dilution, we should concentrate on this or that. Believe me, some of these things that we have in mind are astounding, outstanding, if we can achieve some of those. So it is worthwhile. There is a board that will decide on these things on their merits. So it's not going to be just out there, do what you will. But our growth strategy in that has got 2 or 3 vectors, and one of those vectors people don't even appreciate where that can take, and that's a little bit down the track. But our vision for growth, including Tumas and Mulga Rock, and then those other things, is profound. And it's to make a true tier 1 producer with flexibility, diversity of supply, and making it attractive to groups way beyond just the single idea of let's sell some product to one utility, and so. That's, you've got to understand the market. You've got to understand what it is, how it's going to go in the future, what type of complexion these companies need to have, what they need to be, and how they need to set themselves up to be a major producer out to 2050. And those formative years are now in the next 2 or 3. And so, yes, we have to do a few things in parallel, but I can assure you that there will be no dilution of value to any shareholder as we approach this business.
Okay. So you're still thinking big. There is a vision. You're not going to be. We can't be clear at the moment with us what that is. Okay, appreciate that. So let's go the other side of the room and back into Western Australia, Mulga Rock and later Alligator River. Western Australian politicians have not made it easy for Vimy thus far, or maybe a little bit of blame should be attributed to the company too in terms of the way they've gone about it. But do you think that you can operate in that environment? What are you encouraged by? Why would you go for a Western Australian project, given how the politics of it to date?
So what Vimy have achieved remarkably is they've got a project which is approved, which has got a certain guidelines within which it needs to operate. And as long as it does those things, its project is alive and available for development. And that is a really good framework to have. So then you look at the issues are, environmental, the local, the indigenous relationships, and the anti-nuclear people. The anti-nukes, they're part of, you've got to deal with it. They're getting more and more out of vogue and fashion, and yet they load everything onto every other thing, and they bring every bit of dirty play to try and spoil the operation of uranium operation. So yes, there will be some headwinds on that, but when you look at our board and who is in that, when you look at the technical team, which has got no peer and its management, these groups are now more fearful that this project will happen, and you'll find they'll go for the man a little bit more because that is a threat. There's a gravitas about where this project is now. And so, look, I think it can work within the framework that even though the government is not pro-uranium, they have given the chance with very clearly defined criteria how this project can go to development. That's all you need. And the rest is up to the ability of the teams and the company and its philosophy, culture, and all of that in terms of making that effective.
So all you want is a framework from the politicians. Say, if we meet this framework with these guidelines, you will not get in our way. Because the other thing I think politicians are fearful of is rising prices. Cost of energy across the world is soaring, and we're feeling it here in Europe. And I guess Western Australia is no different. I saw a petition, an Aussie petition, basically saying, could we remove the law restricting the use of nuclear in Australia? I thought that was an interesting, I should say, slight change of narrative from a sort of lot of anti or activist activity through to something the other side actually waking up going, well, actually, no, we do want it. That's interesting to you. Just on the so what you will continue the discussions and sorry, who's there? You're going to be the MD. Who are the other people who are actually and what are they actually doing in terms of this new formed merger company?
Well, we've got two directors coming in from Vimy and four directors from Deep Yellow.
Got it. Okay. Who does what?
Well, basically, the one of them is a NED, independent director, and so that they don't do anything active in the sense of in the field. And Stephen Michael, he's coming in as an executive director. He'll be very much involved in the integration and certainly ensuring the continuity is not lost in terms of those understandings and appreciations from government, and that we're adhering to that and not jeopardising any of the process. He's a non-technical guy, and we've got enough around there. Our board needs to grow beyond that as we get larger, as we need to accept new challenges and all of that sort of thing. The board is a very an alive sort of organism that needs to be suitable to the time at which it evolves to. So that the management is in place. There aren't too many coming in from Vimy, but though we gladly want them on because we just can't get enough good people, and our aim is that they assimilate, feel comfortable and safe in where we're at, and that there's no us and them and all of those aspects that need to be nurtured. So when you're looking at this whole period, we've got a sort of a 3-month courtship now. It was like the engagement with the scheme of arrangement, and there's a whole legalistic process, independent experts' reports and things that have to be done. And meanwhile, the Vimy shareholders need to be convinced that this is a very good deal for them, and I'll be helping out wherever I can to ensure that message comes across, working hand in hand with Stephen Michael, who's the current MD of Vimy, and so that is a whole process in terms of our sort of other expansion ideas. There'll be nothing sort of happening in the next 3 months because there's a lot to do now, and there's a lot to sort of get correct and get it all working. Although that we're sort of joined at the hip a little bit, but not fully as one. And but there'll be sort of committees that make sure that things are supportive of activities that will happen post July. And but meanwhile, recognising that the two companies, it's still two independent companies with their own sort of confidentialities, etc., and respecting that. But there is a way in which that must be nurtured, and that has priority in the next few months.
Do you think obviously of global events at the moment, Ukraine, Russia, sanctions, all of this kind of conversation out there, do you think, has that affected the way that the uranium juniors are going to, get funded going forward? Because they obviously, I think the US is trying to debate whether or not it totally rejects all Russian enriched uranium, the way that it may choose to deal with countries associated with Russia in the shape of Kazakhstan. It's getting quite messy. And then you've got this sort of China, this huge Chinese infrastructure being built out for another whatever it is, 45 reactors. But the fact that they're cozying up to Russia, does that allow them to have conversations with guys like you? Do you feel any sort of sensitivities around this? Having to pick a side, I guess, is what I'm asking. Or is it just get your head down and business as usual?
Well, I think that the only thing you can say with any certainty is that what's happening and what has happened will have profound changes, I think, as I've said before, generationally. And the supply sources and how they work, whether the world ends up in two blocks or not. But energy security, and all of those, there's always been sort of cross-border, or cross even ideological boundaries. I mean, it's always sort of happened. I don't think it is a case of just saying, play it from both sides. I mean, you've got now India, who's made this absolutely visionary and huge implication with Australia, a free trade agreement. And that free trade agreement, you can be rest assured, is not only for just normal commodities, but also for energy, gas, and uranium, no doubt. And yet India is also connected in its traditional supply to Kazakhstan and all of that side. This will be, probably the third largest economy in the world, and the entering into this, into this trade agreement, which is just only announced half a week ago, but they were working on this 6 months ago. So nothing happens because there's the Ukrainian war. Let's go out on Thursday night and knock out a trade agreement. These elements come in. Sometimes, events like what has happened makes sort of receivers of products more aware of the vulnerability that they have. And so that has to diminish, not eliminate, but then you can't rely. And the Germans, bless their hearts, are now starting to realise that wacko, I mean, talking about profound changes, even though it won't happen. Even the German or some of the more intelligent ones are saying, we need to keep these 3 reactors we've got because we just desperately need them. Well, to have those words even uttered 4 months ago was impossible to even conceive. But people change their attitude when somebody's got them around their nuts and starting to screw them, and then they say, yes, I've got to react to have energy in my country, electricity. And because once that electricity gets affected, I'll tell you, those governments won't be there very much longer. So they're the profound changes that are happening, and you can only look at how your strategy and your vision for how you are in your own sector, how that can be sort of capitalised upon. What I've been saying for years has always been for outcomes like this, maybe not that one or the other one, but there's a preparedness there, and that strategy would it has to be anyway. When you look at companies like Rio disappearing and big sort of multi sort of operational uranium operations gone, and there's vacuum there, and you can't have those vacuums filled by, as I say, single asset companies. You need companies that can build asset bases that go out to 2040, and not sort of have a contract and then wonder what's going to happen after 10 years or so. So it's not actually just predicting, oh yeah, my strategy, oh look, that's happened and now I'll change it a little bit. You don't have to change it very much when it's built for a commodity that's been, absolutely in the doldrums. It's been sedentary. It's ragged. It's not exercised, and people are virtually a standing start, and a lot of pontificating going on. And that pontification has to now come to some sort of reality. There's some going to fall off the perch on that as it becomes obvious. It's not possible, that cheap talk, because it gets serious now. These utilities need product, not just saying, oh yeah, I can do it. And OpExes and CapExes that just don't mesh. It's just irresponsible. It's so serious that you've got to be able to deliver what your mouth is talking today. Your hands and your people have to deliver in 4 years' time, in real sense. So it's getting serious, and I think that what I'd like to say is the reasons why our share price is going up, and as I say to my guys and women, that each time we achieve the attributes of the company that I've been talking so long about start illuminating. Say, oh God, that's why people were hiring people in that didn't need and didn't seem to need, and building that sort of core group that'll be the engine room of the future and its growth and what it can do. So it is a bit complicated, and it's not as easy as just having a strategy, like having a contract. And these are a little bit more complicated than just the 8 letters that make the word strategy up.
Yeah, I agree with you. You brought a smile to my face when you were talking about Germany, and just remembering back to, I think, last week when the economy minister of Germany asked people to start using a little bit less energy. It'd be really helpful, because our strategy just isn't quite working on that front. But here's the bit I want to get to and try and understand, which is, okay, the merger number, $658 million merger. I've mentioned it a few times here, but the collective production, as measured by both companies, is about 6.5, maybe to 8 million pounds, right, per year. That's sizable. And what I'm trying to work out is, when I compare you to some of the, say, North American either foam producers or developers talking about £500,000 to £1 million a year, obviously you're noticeably, sizably bigger than them. But their valuations, in a couple of instances, dwarf yours or equitable to yours. So are you undervalued or are they overvalued? And if they're overvalued, what do they need to do? Because they'll need to come up with some fantastic pricing to kind of backfill the current valuation, or cross fingers, find someone to acquire them, so that to achieve a few things. One, fulfill that valuation, and two, ensure that they don't actually have to go through the trials and tribulations of actually getting into production. So that seems quite complicated set of questions and answers that need to be discussed. And then there's the other bit, which is the merged value. As a CEO, you meant to tell me that you're undervalued, but what's the reality in terms of that the balance there? Are they overvalued? Are you undervalued, or is it some combination of both?
Well, the big without sort of judging that, which I will in a minute, but the North American companies are valued at a significantly higher amount than the Australian. So in that sense, there is still accrued value. There's still hidden value in the Australian stocks. If you say then that we're undervalued, not just Deep Yellow, but the Australian and the North Americans are overvalued, I think there is a bit of there's more overvaluation in the North American, and that's something that they have to live with, because that's very hard to. It's got to be some hard lessons there to learn when you work it out that at £2 million you need $120 a pound to realise the big market caps can be a curse if you don't balance what you can produce, what your upside is, what you can deliver in the future, and not just going there, promoting, harping, getting the drums out and the bells and the cymbals and trying to crank up the company, which is great. I think that's a commendable sort of attitude. But you, in the end, you've got to deliver something. And these companies that are in that category now are not there. There are some just accumulators of resources. They'll never pretend that they'll be developers, and people are just following the, so many £1 million and an EV of this is the value that somehow it comes out. So I would say in summary that there is upside. If you want to bet each way, probably the value somewhere in between North America and Australia. There's some Australian ones that are probably overvalued as well. And that's something that those guys have got to sleep to, because the very moment they put out a DFS to produce, the light clicks on, and to say, everybody can work out those numbers. And it's then, unless you've got upside, you've got pipeline, you've got a completely other dimension and X factors in your company, it can't just sit on that production on one project. So these are aspects as well, in terms of growing, in terms of pounds in the ground, in terms of pounds out of the ground, is really how you need to look at your future activities and make sure that your company doesn't run out of legs, having achieved one aspect of your desire, which is share price, but not achieving the other, which is how to sustain that share price and get accretive value coming through.
Doesn't that make it difficult for you, John? Doesn't that make it difficult, or for companies like you? And like you say, you're saying I can't tell you the vision and strategy yet, but let's say in a hypothetical situation, you're looking to acquire more pounds in the ground elsewhere in the world. You're saying some Australian companies are overvalued. You're saying the North American ones are in comparison to some the Aussies. Doesn't make it harder for M&A, because you're not going to strive in there and say, I'll tell you what, I'll pay you full market value as defined by the exchange that you're on at the moment, because you want to value the pounds. You'll have a price in your mind for that. So doesn't that reduce the kind of the field of play for you? It says there's not that many companies that you say, well, actually, it meets all of our criteria, and if we can come up with a number together, this could be a really good deal for all shareholders, because backfilling, that's not your job. You don't want to overpay.
No, and people would have thought that companies have gone up in value 5 times since we've started, and there's still value in terms of the Vimy Deep Yellow deal. Aha! How did that happen? So they'll still, and I'm not going to go into this area. I'm not giving any clue in terms of the ideas that we have in terms of how we will answer to your question, and in what way we can do something. And some of it will be quite novel, and but it allows us to be novel, because when we come and talk some novel ideas to some people, they can tell that there's a competency in the group. And it's not just, I've never done this before, but now I'm going to do something else, and I'll deliver a mine that I've never built before, and I'm going to deliver a strategy for something that is suitable for the future. That you must have an idea of what the look of the sector is going to be, and what you want to create within that sector that gives value as against your competitors, and they're big pictures that you need to then put the detail into it. And I'd like to think that that's the path in our growth that we go, in terms of, increasing, organically growing our company with real assets that will produce and are not just blowing hot air around, and that we can build our upside assets like Alligator and Omahola, and put huge upside and more resources, which we're capable of doing. So we've got internal pipelines, and then on the outside, there's some strategic things we could do, and we'll only do it if it fits the Deep Yellow growth model. And it's not something that we're absolutely hypnotised by, but I think there are great opportunities to make something completely different and much needed in the sort of uranium sector.
Well, I have a few thoughts on where that might go, but that's why I asked you in the context of what's going on globally in terms of the full supply chain.
Yes.
There is now this kind of east-west divide. There seems to be two blocks and two. Well, the playground has divided in two, right? And one side has got more skills than the other at the moment. And I just wonder what the opportunities are and the available capital potentially available to fill in some of the blanks. So I won't push you anymore. You'll tell me when you're ready, and that's fine by me. I think let's leave it there, right? We came on to talk about Vimy. We've gone a little bit further afield than that. I'm sort of intrigued as to how some of the companies who have been, say, talking a good game, and now at the point where they've got to start delivering, where they go from this point, and do the chinks in the armor, or do the cracks start appearing as they get closer to actually having to put a full study forward with the economics in place, and how people interpret that. So interesting times for sure, John. Appreciate you coming on. I've learned a lot as usual from this conversation. So we'll see you soon. And so when does this thing get over the line? We're talking June, July time for
July.
Yeah,
mid-July maybe. Yeah, it's plus or minus a couple of weeks.
Okay, and in the meantime, all the organic growth is cracking on as well in Namibia. We'll see you soon. Thank you.
Forward to it, and I think every time we'll talk, there'll be another sort of vista will open up. Thank you very much.